All right, today we're going to do something a little different. We're going to crack open a dense corporate financial report and play detective because buried inside Bloom Energy's latest filing is a massive multi-billion-dollar bet on AI. So let's deconstruct it and find out what's really going on. So you've probably heard of Bloom Energy. They're a big deal in the clean fuel cell space, but their official reports, they're filled with jargon and numbers, and they don't exactly tell you the whole story. To see where this company is truly headed, we need to put on our detective hats and find the clues hidden between the lines. So you get this 30-plus page document dropped on your desk. What's it actually trying to tell you? That's what we're here to figure out. Let's peel back the layers and find out. Okay, so here's how we're going to break it all down. First, we'll do a quick financial health check. Then we'll look at a pretty big boost they're getting from Washington. After that, the big one, a billion-dollar bet on AI. Then we'll see how they're cleaning up the books, and we'll wrap it up by looking at the risks on the horizon. Okay, let's jump right into the numbers. And right off the bat, we've got a bit of a puzzle on our hands. The top-line figures seem to be telling two completely different stories at the same time, which, is exactly the kind of breadcrumb trail we love to follow. Just look at this for a second. The revenue, wow, it shot up from last year. But the real story here is that income from operations. It swung from a nearly $10 million loss to an almost $8 million profit. That is a huge turnaround. I mean, can we just talk about that revenue growth for a second? 57% year over year. That's not just a nice little bump. That's the company hitting the gas hard. It tells you that whatever they're selling, people are buying it like crazy. But that's where the simple part of the story ends. And this is the puzzle I was talking about. How in the world does that happen? How are your day-to-day operations making money for the first time in over a year, but the company still ends up $23 million in the red? To figure that out, we've got to find the other pieces of this story. All right, our first big clue doesn't even come from inside the company. It comes from Washington, D.C. A new law just got passed, and it's basically creating a massive tailwind for Bloom and really the entire clean energy industry. Here it is. The One Big Beautiful Bill Act, or OBBA, signed into law this past summer. Now, this isn't just some minor tweak. It's a major piece of legislation that changes the game for clean energy tax credits. And trust me, this thing is a huge, huge deal for how Bloom makes money. So what does this actually do for them? Well, it's a triple whammy. First, it extends a super important 30% tax credit for their projects. Second, it gives them another 10% on top of that if they use American-made parts. And third, it lets them immediately write off their R&D costs. It just makes their whole business model work so much better. Okay, get ready, because this is the bombshell. This is the big one. If that new government policy is the tailwind, this next part is the rocket engine. It's a multi-billion-dollar bet that ties Bloom directly to, well, the single hottest thing on the planet right now, artificial intelligence. But before we get to the giant number, let's just quickly break down what a financing framework is, because it sounds complicated, but it's not. Basically, think of it like getting pre-approved for a giant credit card that you can only use to build new projects. The money is just sitting there, ready to go. And here's the credit limit on that card. $5 billion, with a B. Bloom has teamed up with a massive investment firm, Brookfield, to create this $5 billion fund. This is more than just a little confidence booster. It's a war chest that will fund their growth for the next 5 years. But for what exactly? And here it is. This is the sentence, right from the report, that changes everything. Let that sink in. This isn't just a green energy fund. It's an AI infrastructure fund. The light bulb moment here is huge. All those new data centers for AI need a crazy amount of power, and they need it to be reliable. And that is exactly what Bloom sells. So how does this whole partnership actually work? Well, it's pretty smart. Brookfield's AI fund puts up the lion's share of the money and owns the projects. Bloom chips in a much smaller amount to get a little piece of the action. This structure lets Bloom grow like crazy without having to bet the entire farm on every new project. Okay, so let's recap. We've got a huge tailwind from the government, and we've got our rocket engine strapped to the company in the form of this AI deal. That explains all the excitement. Now let's see how they're managing things internally. This is where we finally solve that puzzle of the net loss. Here it is, the biggest piece of the puzzle. Bloom basically refinanced some of its debt. They kicked a big payment deadline from 2025 all the way out to 2029. It's a smart, long-term move. But because of accounting rules, they have to book a one-time loss of over $32 million for doing it. Now, this is super important. This is a paper loss. They didn't actually lose any cash. And just like that, that one move is more than enough to wipe out their operating profit and push them into that net loss. Puzzle solved. And they're doing more cleaning up. They also took a nearly $20 million write-off on some of their older inventory. Again, it looks bad on paper for one quarter, but it's a really smart, forward-thinking decision. This is like a spring cleaning. It shows they're focused on the future, not clinging to the past. And one last bit of housekeeping. There's been a pretty dramatic shift with one of their key partners. A longtime investor, SK Ecoplant, sold off a huge chunk of its shares just this quarter. They went from being a major partner to just a small shareholder. This might just mean that with this huge new Brookfield deal in place, some of Bloom's older partnerships are just changing. All right, so the story so far is all about massive opportunity, right? Big tailwinds, huge new markets. But a good detective looks at all the angles, so we have to talk about the risks. And the report is pretty upfront about a few things to keep an eye on. So check this out. That amazing new Brookfield partnership, it already makes up 55% of their revenue this quarter. I mean, it's incredible for growth, but it also means that right now, a lot of their eggs are in one basket. That's a classic concentration risk they'll have to manage. And then there's the unavoidable legal stuff. They're in an ongoing legal spat with an old supplier over who actually invented some of their patents. The report says the outcome is unpredictable, which is basically lawyer speak for we have no idea. But it's an uncertainty that's just there. So when you step back and look at all the pieces we've uncovered, the real story of this report becomes crystal clear. This isn't just a boring financial statement. It's a story about a company at a major turning point. They're using these huge outside forces, government policy, and the AI boom to light a fire under their growth, all while making some tough, smart decisions to get their own house in order. And that really leaves us with the billion-dollar question, doesn't it? Bloom has made it pretty clear they're going all in on powering the AI revolution. All the pieces are moving into place. The question is this the move that finally flips the switch and turns all that incredible growth into lasting, predictable profit? Well, that's the real story we'll all be watching.